Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. All right, we're going to go right to the charts here and start out, as always, with the S&P 500. All right, looking pretty interesting here. We said last week, this is the daily chart. We said last week, kind of tough to tell because it's hitting right on this 200 moving average. We were 50-50 to the upside or the downside, and a bearish reversal bar here on last Friday ended up breaking down, touching right on the 400-day moving average. Closed the week at 41.17, so we broke right through the 4,200. Dropped about $100 on the S&P 500. Next level of support is going to be around 4,050, somewhere around there. Is interesting that it's hitting on this 400-day moving average. If we go out here to the weekly, we could see the 200 weekly moving average is going to be just probably by the time it gets there, just north of 4,000. I'm sorry, just south of 4,000. So looking like the S&P 500 is going to continue going down, which is good for gold. All right, gold futures here. All right, close the week just right around 2,000. The one thing that makes me think that we might not be able to continue moving up here in gold is, I learned a new trick with this program. Check this out. Alternate H. Bam! Horizontal trend line. Okay, so we put this right around 2,000 or so, and you can see as we move across, there is a lot of resistance built up right around 2,000, just kind of going across the board here. We do have a triple top in the metal, 1, 2, and 3 up here. Will be interesting to see if we can break through that triple top here in the coming months, but it is interesting to note there is a lot of resistance right here, right around 2,000. So it'll take quite a bit for it to break through that. Also got kind of a bearish reversal bar here on the close on Friday. Levels of support are going to be around, what did I write them down as? 1950, which will put it right around there. And then also again around 1920, which is kind of where you see the horizontal dashed line right there. So I would expect gold to correct down more often than not. If it does blow through that 2,000, then the next level of resistance is going to be around 2050. All right, moving on to GDX, the gold miners ETF. This chart actually looks to me like it's going to go up just a little bit more. RSI is a little stretched above the middle of the road. But this chart does, to me, look like it's kind of got that little scoop coming up to catch it with the 20 moving average, like it's going to shoot just a little bit higher. But if Mother Gold does turn down as we expect, it's very likely that GDX and also GDXJ is going to turn down as well. It's kind of rare that gold goes down and the miners go up, although it does happen, but more often than not, no. Both GDX and GDXJ look about the same on the charts, and yeah. All right, moving on to Orogen royalties. We heard about this from Rick Rule, picked his brain on it, kind of trying to find the next Franco Nevada, I think. We had limit orders in. We've talked about, I've just started placing, using this new software, placing these arrows in. I have to go back through all my brokerage accounts and find the points to be able to place these arrows in the correct positions. But first entry point into Orogen royalties is placed. We had a limit order in at 48 cents, and we see it shot up here, probably because of the royalty and streaming boot camp. Remember, this company is very small market cap. It's around 100 million, I think. So no market orders. Okay, do not place a market order on this, or you may find that you just pay $1 a share for it or something when it's going at 51 cents right now. But we basically have limit orders going all the way down to 35 cents. Probably will never get there. I imagine that's probably a pipe dream. But if you put limit orders in around where it is now, just put a limit order good till cancel for 50 cents or something, and then you won't lose your shorts. All right, silver had a nice for the week, a little bit flat, but over the long term right here, looking pretty good. RSI is a little middle of the road. It's around 50 or so. Don't quite have a Fibonacci just yet, but you know, if gold corrects down, silver's probably going to correct down with it. The leverage bet we placed on this was with SILJ, and again, I haven't put the arrows in yet, but we got one in around $8 or so. It ran up to 9. Maybe we should have sold it there. That would have been a nice little 12% move, or 13 or whatever that is. But what does look like is happening right here is we're hitting up on a Fibonacci. So if we run this right around there, we can see that it's hitting in the bottom range. I mean, Thursday was the tick if you could catch it. Had a nice little bounce right there. And ideally, since we didn't catch this one, or if you did, good on you, we'd like to see this come up, kind of come back down and touch around this same level, and then go up, creating a one to the upside. And then I think this might be a pretty nice entry point for a leverage bet on silver. Again, these are the SILJ is the junior silver miners ETF. So like their biggest holding in here is First Majestic. So depending on how you feel about that company, I just like the leverage to silver. Okay, moving on to copper futures. Copper had a little bounce this week. The copper futures closed at $3.64. Setting up a lot of nice resistance, like, let me use our little trick here, alternate H, and we'll put in a horizontal line so we can see a lot of support right along here, right along this, I don't know, what is that, $3.60 or so. And going back, let me pull up the weekly here, a fair amount of support built up right around the level that we're at now. I think it's more likely than not that copper is going to go up over the next 5 to 10 years. I feel very confident on that. Over the next 6 months or so, maybe not so much. But I think that, you know, talking to the smart people, Peter Granich and Rick Rule, and I think copper is going to do very well, but we may have during a recession, this is probably not going to do well. But we need to start placing our bets now, start doing the research now. What companies do we want to get into? Do you want to play Arizona Metals? Do you want to play Ivanhoe Mines? Do you just want to play this ETF right here, COPX? This is the easiest way to play it, I think, and the most beta way. You know, this is like the URNM of copper. And anyways, we placed a bet here on COPX on Thursday. Yeah, we'll see how copper performs. I think it's going to do very, very well. This is the easy beta way to play it. Want a little alpha play here? We did an episode recently. We'll put a link up here if you want to watch it, with Peter Granich, and we did kind of a deep dive into Arizona mining, and then a deep dive into Arizona Metals. This company right here. So this is a really leveraged bet. Now, keep in mind, these guys are drilling and exploring, probably have no intention of actually building a mine. These guys are likely going to sell it to Barrick or to, you know, BHP or Rio Tinto or a company like that. And if they do, you know, Peter and Michael Gentile think that this, you know, share price sitting around $2 right now could shoot up to, you know, 15 or 20. We'll see. You know, the safe beta play is COPX, and then the, you know, if you want to capture some alpha, Arizona Metals. We've reached out to the company. We're going to see if we can get them on the show. I think anything below $2 a share is a decent entry point, and it's setting up a nice little double bottom right here. So we'll see. Okay, uranium futures. This is showing that it's at $74.20. I went on Twitter just before the show and checked with John Quakes, and he said it's $74.50. So I think we're kind of at semantics here, but pretty impressive. This is the highest spot price of uranium in the last 15 years. Okay. So it just keeps climbing. The fundamentals just keep getting better and better every day. SPUT Physical Uranium Trust here trading at almost a 6% discount to NAV. So if you don't have anything in uranium, the easiest way and the most beta way to play this is to buy the physical uranium. They have a warehouse full of these 55-gallon drums of yellow cake sitting in here, and you can buy shares into that. And right now, for $100 worth of uranium, you get it for, what is that, $94.11. Okay, it's actually a deal. And if the redemption value actually comes into this thing, that discount right there is probably going to go away overnight, if not in 2 days. Okay, so I don't know that we're going to see the radical discounts. I'm going to pull up the Sprott Physical Uranium Trust, the one we're just looking at here. I don't know, when we're pounding the table back here saying that, you know, it's at a 16% discount, it's at an 18% discount. I think those days may be gone, but we have a lot of new listeners that are just getting into uranium, and this is where you are now, so you got to take the hand you're dealt. The way I look at this is buying this on pullbacks and going here to their website, the Sprott Asset Management, look up U.U right here, click on that. If I remember, I'll throw a link down in the show notes and you can see it. And look at this premium to discount. And if it's at a discount, it's a buy. If it's not at a discount, then it's not a buy. But, you know, the higher the discount, the better, is basically the way you got to look at this thing. All right, so leveraging uranium with easy beta play is URA. Now, this is not a pure play on uranium. Last I checked, only about 70% of the companies are in uranium and the rest are in something else. But kind of an interesting, compelling entry point right here. We're going to draw a little trend line on URA. And, you know, this started back in May of 2023. And that trend line has been extremely accurate. And we're pretty much hitting on that now. Okay. Now, again, I'm not recommending URA. I would much rather have URNM, a pure play on uranium, which the graph looks pretty similar, except 100% of these companies are in uranium as opposed to only 7 out of 10. So if you believe in the uranium narrative, this is the one to have. If I could only have one bet on uranium, it would be URNM. So, you know, let me pull back on the life of this thing. You can see how volatile this is, right? So let's say a lot of people found out about uranium right up here, and let's say they bought in, and then now we're not even back to even there. Be patient, wait for pullbacks. There's always entry points, and if they're not, there'll be some other commodity that's coming next, like copper, okay? But generally speaking, I think buying back on pullbacks, maybe, let's say you have $100 to invest, and you want to spread that out over well, maybe $100 is a bad example because it's $43 a share. Let's say you have $100,000 to invest, you know, place 10,000 as a limit order right here on this 50 moving average at 42.75, and then place another limit order for $40, you know, for 10,000. Spread your bet over, you know, 10 or 20 bets as you study this thing, and you may find out, well, I don't want to put all 100 grand into URNM. I found this other company that, you know, Denison Mines, that could have a huge upside. You know, I want to put at least 5,000 on that, right? So learn the sector. Don't go all in at once. Spread your bets out. You know, stay tuned. This is the one I'm excited about, URNJ. We had quite the run up. I haven't put the arrows in yet, but we basically made an entry point right there, and I think another one right there. And really wishing we had bought more, because this thing, I mean, has just skyrocketed. Let's see what that is. That is 82% in 160 days. Not bad. Or if you go right here, if I somehow time the top perfectly, 120 days. Not bad at all. Maybe a lot of this has been already realized, but I think the same thing with here. Make entry points. We have limit orders in. We had one limit order, I think, for $22, another one for 21, another one for 20, another one for 19, another one for 18. Just kind of capturing it as going down, fully expecting over the next year or so for this to have another big move. All right, Uranium Royalty Company. If you're familiar with royalty plays, this is the only one that is offered in uranium. We have a limit order in. You know what? I should have pulled it up before. I think I put it in for $2.50. I'm basically trying to capture this 400-day moving average right here. But Uranium Royalty Corporation, if you believe in royalty plays, is the only one for uranium. So like this one a lot. And also right around there is a fair amount of support. Uranium Energy Corporation, like this one a lot. These guys have said that they're going to start producing when the spot price of uranium is north of $60 consistently. We're at $74.50 as of this weekend. So I think these guys are going to be coming online very, very soon. You know, really wishing we'd bought more. I mean, we kind of piddled around down here, and I think our average share price is like $2.70 or something. Yeah, this has just been an absolute boss. Would love to have more, especially once these guys come online and start producing. I think this company is going to do very, very, very well. But still looking for an entry point. I mean, we don't want to be chasing green bars right here. Maybe it'll come back down to the 50. If we were to get a correction like this again, we have one limit order in here for $4.26. I should probably just remove that because it's probably a pipe dream. But if we can consistently see, we got 1, 2, maybe if we get a third one, like kind of equal spacing right there, that might be an entry point. But I don't know. Would love to see a liquidity crisis and this thing just get washed out so that we can get more. All right, moving on to oil. We have oil futures. Crude closed the week at 85 and change. Really compelling, interesting point right here. You know, we were able to catch the tick when it shot down to like 63. I think we snagged it at like 67 or something like that, and then got it again right here. Not quite the deal that it was back then, but according to Doomberg, this is right around where the big thinkers want oil, $80 to $85. So I think it's fairly priced. Okay. But it is a compelling little double bottom right here. Okay. Now we're going to move on to our favorite oil ETF. I drew in this horizontal line right here, and you can see up and down, right? That little purple line right there is the 200 moving average. The thing that makes me think this is going to go down, RSI isn't quite down to 30 yet, but see, we have this bearish reversal bar. If we go into the hourly, I don't really see anything here that is making me think. I mean, I guess on Friday it kind of had a little bit of a double bottom there, but we're getting darn close, and this is something that's going to pay dividends over a long time. I mean, each one of these little blue dots right here is a dividend, and it's been increasing gradually over the last several years. I think this is going to do quite well. Exxon, same thing. This is, according to Rick Rule, they just made an amazing purchase. They're going to, if we're right and the price of oil is going up, Exxon's the best one on the planet. They pay a 4% dividend that has been increasing over time. And, this chart is looking pretty compelling. It could go lower, but what we did was we had 3 limit orders. We had 107, 106, 105. I didn't check to see if the 105 hit. Boy, that's darn close. Maybe it did. Hopefully it did. Anyhow, and then before Monday, we'll put in some more limit orders for 104, 103, and down. Really don't see this thing dropping out of the sky, but if it does, the deal only got better. Okay, Awakening wants to know about Africa oil. As soon as I pulled up this chart, I made the sound of all, ooh, okay. We asked Rick Rule about Africa oil. If you want to check that out, it's in our last episode. What's compelling about this? Okay, we have relatively low RSI. I mean, the tick to catch obviously was back here at the beginning of the month, but had a nice little double bottom here. Okay, if we draw get the alternate H, there we go, horizontal trend line. Decent amount of resistance going back over time on this one. Let me pull up the weekly here, and you can see that there's a fair amount of support kind of where it is now. So, if you know fundamentally about this company, if you want to go back and listen to Rick's comments and past episodes of what he said, this is not for the faint of heart, but, I like Exxon a lot more for a beta play. But if you want some alpha on oil, buyer beware. Doesn't look like a horrible entry point to me. I mean, low RSI, we got a double bottom right here. Yeah, kind of like it. Okay, and then Snowflake wants to know about Petrobras. All right, I drew in this overhead line right here. This is basically showing resistance, meaning that it has to break through that resistance to move up to the upside. I don't know. As much as I love this company for the dividends, okay, so each one of these little blue dots here is a dividend. And like when we look at some of the share price in the moment of these, I mean, you know, down here was $9 and they paid $1.24 dividend. I mean, that's just amazing. Now, what happens, you'll notice if you go past on these dividends, when they pay out a dividend, the stock just completely drops. Okay, so they're paying out huge dividends and they're doing that. And every time they do that, then they have to pull from the pool and it goes down. Looks like we might be creeping up on a dividend here. So you might catch a tick where, I mean, look at some of these drops right there to there. I mean, that's down like 10% or so. So you might be able to catch one of those moments as soon as they pay out the dividend, then you can jump in and kind of lock yourself in at that moment. But I don't see any technical entry in right here. As a matter of fact, it looks to me like it's the price action is going to move down. Okay, now moving on to platinum futures. Platinum closed the week at 905. Basically what we've been doing is we bought back here, here, and here. And I think anything around $800 to $900 in platinum is pretty good. If we hit a recession, there's going to be less demand for cars, and meaning less demand for catalytic converters, and platinum and palladium are going to go down. But you know, when you look at the platinum to gold ratio, it is about half. Okay, so it takes 2 platinum coins to get 1 gold coin right now. And there's been moments in history where it's the other way around. So our plan with this is to basically slowly accumulate on pullbacks over the next couple of years or however long it takes. But if there's any hiccup in Russia, in South Africa, or Zimbabwe, this is going to go parabolic, just like these last moves that you've seen over here. And that's exactly what caused those. Okay, so this is the ETF. Yeah, it is the ETF that we've been placing bets on for platinum on pullbacks. Palladium, 1,200 seemed to be the going rate for a while. It's down almost to $1,100 an ounce. Don't really see any technical entry other than, let me draw a horizontal right here. See, we do have some support right back here, but that's about it. I might be throwing darts here. This is an easy way that you can play it. Same company, Aberdeen. Yeah, this is a real good proxy for palladium. And if you want to do the easy one and just bet both platinum and palladium, you can do that through the SPUT Physical Platinum and Palladium Trust. It's got about 50-50 of each one, about 50% as far as dollar amount of platinum and 50% palladium. So easy way to play that. Doesn't look like a horrible entry point, although this, I don't know that you can really go by these technical charts. Wow, look at that volume right there. When was that? On Monday. Interesting. Huh. Anyhow, I hope you guys got something out of that. Hit the like and subscribe and share this with anyone that you think needs to hear it. I see in the analytics you guys are actually sharing the show, which is growing the audience. We are over 5,000 subscribers, and that is because of you and your sharing and liking and hitting the algorithm. Thank you very much. Have a great rest of your day, and we will talk to you next time.